Okay, now I start recording now. So I'm saying that price is either going to be trending up or it's trending down, right? So I'm trying to show you guys what it means for price to be trending up and then also show you guys what it means for price to be trending down. So this upside you see here, this is what they call price making higher highs and higher lows. Let me type that one out as well. It take some time. Uh, HL. Please hang on. Okay, so when the price is trending up, you're going to see patterns like this. These patterns is what you like to call I call this is the higher low, higher high, higher low, higher high, higher low. Like when price is making a higher high, a higher low, higher high, higher low, it means that price is trending to the upside. In terms of how do you know if it's making a high high and higher low, you're going to see price start try to like respect the previous low levels. You see price respect this low level, create this high, respect this previous low level, then create this high. It never broke below this previous low level and then made another high. Like the price keeps respecting these low levels and keep breaking these high levels, right? That's what you want to call price making higher low, higher highs and higher lows, and that's when you know that try it's an uptrend. Let me in that chart. If I mute someone again, I'm going to remove the person from the class. So when you come to the chart, in terms of where, let me use the chart to explain that so it makes sense. So when you come to chart, you're going to see that when you look at this zone here, let me mark it out. So if you look at this zone here, you're going to realize that this, let's use this level here. You're going to realize that price keeps making new high levels and respecting its low levels, right? Am I communicating?
Yes, sir.
Yes,
Okay, so
yes.
making new high levels and respecting the low levels, and that's what you know to say that price is trending upwards. It's an uptrend, right? So in terms of when price is trending downwards, that price is in the downtrend. How do you know that price is in the downtrend? It's the complete opposite of what I just explained to you guys here. So a downtrend is the complete opposite of everything I explained here. When price is in the downtrend, you're going to see price making sorry. When it's in the downtrend, you're going to see price making patterns like this, patterns like making these lower lows, making and instead of breaking these high levels, it will be respecting the high levels and creating new low levels, right? So you see price respects this previous higher low level here, and then comes and creates a new low level, and then respects this previous low level again, and then comes down and creates a new low level, right? This is not a perfect drawing, but my point is that this is how you know that price is whether it's trending upward or if it's trending downward, because you see price simply respecting the lows and creating respecting the lows and creating highs, we're showing that it's in an uptrend, and in this part of it where it's respecting the highs and creating new lows, that means that it's in a downtrend. Does that make any sense?
Yes.
Okay, so in terms of the charts, showing it in the charts also show
Please,
you
can you repeat what you previously said?
about what.
The low trend and the high low trend.
Okay, let me
The one you previously said about the not respecting the previous uh, the previous level, low level, something
okay.
like that.
So what I said is that when price is making a downtrend, what you see
Yeah.
going to notice price doing is price instead of like in the case of an uptrend, price is just respecting the low and creating new high.
Yes.
That's why it's called a higher low, and that's why it's called a higher high. This is a higher low. It didn't break the previous low. is a higher low, and then it broke the previous high, so it's a higher high, right? In terms of a downtrend, price does the complete opposite. So price comes here, creates a low, respects this high, and then creates another low, respect this high again, and then creates another low. So in terms of this, in this one, it's called higher highs and higher lows. But in this one, what you now see price doing is simply creating higher lows, HL. No, sorry. What you see price creating is, yeah, higher lows. No. What you see price creating, hold on, let me delete. Okay. What you see price creating is what they call lower lows and lower highs, right? That's what I'm trying to write here. Okay. Lower LH and LL. Right? So with what you see price doing in the downtrend side is just doing the complete opposite of what it is doing in the uptrend, right? So in the downtrend, what price is doing is price is creating lower highs because this high is lower than this, so it's a lower high, and this low is lower than this, so it's a lower low, right? So you're just creating lower low, lower high, lower low, lower high, lower low. That's how you see that you know that price is in a downtrend when price is creating a series of lower lows and lower highs because it is not breaking the previous high and just breaking the lows. That means that it's in a downtrend, right? And when price is ranging, you just kind of see price tend to move around in the same location, right? Maybe price will do this, do that, do this, do that, do this. Like it is just in the same location basically. This is what you know as price is ranging. This is like the most imperfect price range, but most times what other price range you see is when price is just moving inside the same location like this, like just moving inside the same place. Let me explain that in the chart so it makes more sense. So this is where you see price making a high, right? And let me go to the part where it's making a low. Let me try to use that and explain if I can find where price was trending low. The case here is that price has been trending to the upside all this while. So I'm trying to find where I can see a low level. Let me use the 30 minutes time. Then
Okay.
so let me use this section for example. Right? Let me use this section for example.
50 50
49
49
94
Mr. B49, please mute yourself. So you come to this section where price is, if you look at this box, inside this box, you realize that what price is doing inside this box is just price is just respecting previous lows and creating new lows, right? Price is just trending to the downside. It's trending down, it's making new lows and respecting highs. This is not the most perfect example. I'm trying to just use that. And this chart has been trending. Okay, let me use trade I'm currently in. I'm currently in this trade USDPY and it's trending downside now. So let me use for example. So you see this trade. Let me use the 2 hour, the 1 hour thing. So you see this here now. See, price has just been trending downside. If you look at this box and mark this box out, it's been trending downside, right? Are you hearing me? So it's been trending downside for a while. It's just trending down, creating new lows and respecting the previous high. So it's just making a lower low, lower high, lower low, lower high, lower low, lower high, lower low, just making lows and respecting the previous high. So that is what shows that price is in a downtrend. But when price is ranging, what you notice is that price will tend to be moving in the same location. There will be no really clear movement or to the upside or to the downside. Like it will just be stagnant in the same place.
See, still there.
So that is how you know that price is moving in a downtrend. And when it's in a range, it's just going to be moving basically in the same place. I'm trying to find how I can show you guys um about the range. Just trying to show everything in the chart so it makes a bit more sense. But like obviously, I told you guys we are not about to show every single detail. So we're not about to teach the class from beginning to end because it's just 3 days. It's not enough time. Let me use this place as an example. This section here as an example. So if you look into this box, look at this box, right? Let me use one more bigger. So if you look at this box, you realize that price inside this box is not really making a high and it's not necessarily making a low either. It just goes up, it just comes down, goes up, comes down. It's basically moving inside this zone. Notice how price was here, coming up, trending upside, comes here, starts ranging, and then reverses, and then starts going down. So this is basically price trending up, price ranging, and price trending downside. So basically, when price is trending upside, it's making higher highs and higher lows. And when price is trending downside, it's making lower lows and lower highs. And when it's not doing neither, then it is ranging. Right? So going back to gold. I don't want to delete mine. So going back to this, that's how you know if price is trending upward or if it's trending downside. I feel like I should be using Mark whiteboard to draw this out for you guys so it makes sense. Let me hold on. I don't know how I can turn on. I think I can't turn on the whiteboard again because I'm really sharing my screen. So I have to stop sharing my screen and show it. So okay, let me use. I'm trying to show my whiteboard. Hold on, guys. Okay. Can you see the whiteboard? No, it's loading. Can you guys see the whiteboard? Can you guys see the whiteboard?
Yes, you can see it.
Yes, boss. Yes,
Whoever is drawing
boss.
on it, please stop. So, like I was explaining on there before I had issues. So basically, sorry. How do they even stop people from being able to edit the whiteboard again? Please, anyone that is drawing on the whiteboard should stop drawing on the whiteboard because I can see your name. So please, let's all stay calm and stop drawing on the whiteboard. So basically, what I was saying is that King David, I'm going to remove from the class. So what I'm saying is that when you see price making something like this, right? Making these highs, lows, high, low, like when it's trending upward like this, it's basically just respecting these lows here. It's respecting these lows here, right? It's respecting these lows here and simply making new highs. It keeps breaking these high levels here. Keeps breaking these high levels here. And in that case, this is what you call that price is just making higher highs and higher lows. This is a high low because it's a low, but it's higher than this one. So it's a higher low, higher low, higher low, higher low, higher high, higher high, higher high, higher high. This is what they say that price is trending to the upside. It's respecting the lows and making new highs. But when price is trending to the downside, what it's doing is that it is going to be creating new lows and respecting the highs instead. So it's making lower lows and lower highs. This is a very bad drawing, guy. What kind of drawing is this that I'm drawing? My eraser. So it's making these kind of lows here. Still a bad drawing, but we manage. So as you can see here, price is just respecting these lower levels, these higher low levels, respecting these high low levels and breaking the lows, thereby making what they call a lower low and a lower high, because this high is lower than this. This low here is higher than this. That's why it's called a higher high, a higher high. This low here is lower than this. That's why it's called a lower low. And when price is not doing any of these two things, is to do this one and then do this one and then do this one and then do this one, that means that price is in a range. It doesn't have a direction, because once price has a direction, it's going to be making trending upwards or downside. Now, going back to the chart. Going back to the chart where I will say, so going back to the chart where I was making the whole instances, right? The way I like to view the market here, after you have, like, the way I like to view the market is basically like, as I told you guys yesterday, like as a fight between team A and team B. And that team A is sellers and team B is buyers, right? So the red candles are team A and the green candles are team B. They're basically fighting for who's going to gain control of the market and who's going to be in control of the price, who's going to push price higher or who will push price lower, right? This is how I see the market. I believe you should see it like that too, because it will make more sense for you. So coming into a fight where people are fighting, you have to ask what is going on in the fight. That's you asking that question of what is going on in the fight is simply you trying to find out which team is winning. Is green side winning or is red side winning? And how you know if the green side is winning or if the red side is winning is by either you are seeing that higher high and higher low, which belongs to the green side because they are trending up. Either you are seeing that higher high and higher low, or you are seeing lower low and lower high, which is the red side, and they are trending down. So these two things is what will tell you who is winning in the fight, basically. So if you come to this particular fight now, looking at this here, can someone please tell me who they think is winning in this fight?
The green.
Good, because it's trending upwards, because you are seeing things like higher high and higher low. You can see that obviously price is trending to the upside, because what you see here is simply just price respecting these levels here, respecting these lows, respecting these lows, like basically respecting the lows and creating new highs, showing you that it is in an uptrend or in a downtrend. Now, trends depends on time frame. Just like when you come to the map, or when you come to, let's say, the fight, you are viewing that fight from a map, right? Let's say you are seeing the map. The more you go closer, the more you see more information. The more you go further away, the more you see less information and more accurate information, right? So, and the same thing comes with the chart. Just like that fight too. If you are viewing that fight from far, far up, away, above, you might be seeing a different thing. But the more you come closer, you'll be seeing a different thing. And that's the same thing with the charts. When you come to a time frame, the 1 day time frame, yesterday I told you guys that in the daily time frame, what that basically means is that every candle in the daily time frame was formed in 1 day. So every candle here in this 1 day time frame, every candle here was formed in 1 day. This candle happened in 1 day. This will happen in one day. If I was to go to the 1 hour time frame, because what this also means is that since you have 24 hours in one day, that means that inside this candle, you can see a 24 1 hour candles inside this one single daily candle. Because if each of these candles was formed in one day, which is 24 hours, that means that inside it you can find a up to 24 1 hour candle, which is 1 hour time frame. Let me go to 1 hour time frame to make a bit more sense. This is the 1 hour time frame. There's no really big difference when you see that. There's no difference at all. My point is that when you go to the 1 hour time frame, you are going closer. You are zooming in closer. Same thing if you go to the 5 minutes time frame, you are zooming in even more closer. But when you go further like the 1 day time frame, the 1 week time frame, the 1 month time frame, you are zooming out. Right? So trend in these time frames can differ. You can come to the 1 hour time frame and see that, okay, that price is trending downside on the 1 hour time frame because you are zooming too close. But when you go further away and go to like the daily time frame, you realize that price is actually trending upside, not downside. Right? So the time frame you are in, most of the time, will determine the trend that it's in. If you're in the 1 day time frame, it's probably and it's an uptrend on one day time frame. That does not mean that the 1 hour time frame is also in an uptrend. It might be in the short-term downtrend. Right? So each time frame, whatever time frame you are in, will determine the trend that the market is moving in, whether it's an uptrend or a downtrend. So when you come to the market to ask questions of what is happening in this fight, who is winning this fight, you want to find out which market is trending. Is it trending upward or is it trending downward? Now, the best way I would say to find the trend more easily, by best way to find the trend more easily is by going to the 4 days time frame, which is the 1 day, which is good. Because now you have zoomed out, you have seen the overall picture, you have seen what the market is trying to do overall. When you find the trend on the higher time frame, then you can now zoom in on the low time frame to try to wait for trend to turn to that same direction as the day time frame for you to now trade. Does that make sense?
Yeah, sure.
Okay, so each time frame determines the trend that the market will be in most of the times, right? Like I was saying. So when you come to the market to ask questions of who is winning the fight, you need to first of all identify, go to time frame, see the trend, whether he's making those higher lows and high highs or higher low and high high. Whatever he's doing, that is the trend, right? Now you know who is winning the fight. The trend is basically who is winning the fight. That's the trend, because trend means that it is trending upside. Let's say Bitcoin is trending upside. If you know about Bitcoin, it's trending upside because since it's launched at $0 or $0.99, it has been moving up. If you zoom out enough, you find out. Let me go to the chart now. Let me not even say it in my mouth. So this is Bitcoin. Let me go to the 1 week. So this is Bitcoin, right? No drawings. If you zoom out enough, realize that since it came into existence, it has been trending to the upside. But as you that is trading it now, if you zoom into the, let's say, in the 4-hour time frame, you will see that it is trending downside here on the 4-hour time frame, right? So that's why you see most investors, when they are in the chart, holding their crypto, they know for a fact that since existence, it has been trending upside. So they are in the side of the trend. They know that buyers are winning this fight, even though in this lower time frame, it seems like sellers are winning, but no, overall, bigger picture, buyers are winning. And as long as you are with the trend, you always, most times, end up also winning. So that's why it's important that when you are trading, you need to stay with the trend, you need to stay with who is winning the fight. And how to know who's winning the fight is by knowing which side the market is trending on, whether it's trending upside or downside. Right? That's how you know who's winning the fight. Now, in terms of how I enter the trade, how the system I trade, in terms of that, my system is called ICC. Let me type. It's called ICC, which stands for indication, correction, and continuation. Now I'll explain this, right? Stands for indication, correction, and continuation, which is ICC, right? So in terms of what this means, let me show you guys. Like I said, when price is trending up, it is doing this, right? Creating higher lows and making new highs, creating higher highs and making higher lows. For me personally, what I like to call that is let's say, let me come here. You see price where price is coming and rejecting, let's say it is coming here, comes rejecting this area, right? And then price eventually breaks out of here. This is what I call my indication. Remember, they say my trade is called ICC, indication, correction, and continuation, right? Indication, correction, and continuation. So this is me explaining to you what each of them means and how to spot it in the market, right? So this is what I like to call indication. Why? Because if you notice that every time price comes at this zone here, it rejects. Something is stopping it from going up. Maybe sellers have control here too. They are pushing price down. And buyers, when the buyers come under here, they push it up. Sellers pushing it down, meaning that inside this zone, it is ranging. So I'm waiting for price to show me what it wants to do, to show me where it wants to go, right? So that's why I say that when this price breaks out of here, I call it my indication. Price indicates to me that, hey, above this level, I can go this high, right? Price telling me, hey, above this level, I can come this high. Now, the reason why I don't trade this high, this first one, because in this, my system that I trade, you don't trade this indication, right? Let me, do I put, no. Oh my God.
Let's go through cooking school.
Huh?
Let's go cooking school. Oops. We're not good.
Sorry, mute yourself. So, assistant, I'm looking for an emoji that will kind of make it more easier for everyone to spot, but I can't seem to find that emoji or wherever it is. Okay, let me look for it here. Okay. Okay. So move this thing. Oh, let me move this in. I'm sorry, this is not the best drawing. It's one I come up with already. I'm not good at drawing my system. So, okay. Okay. Uh-huh. I think this is clear for everyone. So, what this means basically is I'm telling you that, hey, I don't trade this indication. I don't trade this correction. What I trade is this continuation. Then put yourself. I don't trade this indication. I don't trade this correction. I don't trade this indication. I don't trade this correction. What I trade is this continuation. Now, here's what I mean by that in drawing before I go to the charts, right? So I'm saying that this here, when price makes this move here, this is what I call my indication. right? This is price telling me that, hey, above here, I can go this high. It's like, let me use this example, whereby, let's say you have a brother, right? You have a brother that maybe he goes, he drinks too much, right? And he always goes to this bar every day at every particular time. So let's say you didn't know this, and then one day you are at home, and every day by 5 p.m., your brother goes home, goes out, and then comes back by 8 p.m. Every day he goes out and comes back 8 p.m. So you say, okay, I want to follow him to see where he's going to. And then the next day by that 5 p.m., you saw him going outside the door. Automatically, you already know that, okay, every day by this time he goes out. So automatically, you know that this time now that he's going out again, that he must be going to that place that you don't know where it is. So you want to follow him. So once it's 5 p.m. and he goes out the door, you know, okay, he's going somewhere, and you watch him. So at the first trial, when you're trying to follow him to that place, maybe to meet your friend there later, to go there later, to go and drink your own beer, you won't follow him the first time. What you do is that you watch him to see where he's going to. And that's why I say that in this system, I don't trade this indication because I don't know where price is going to. I'm just watching price to see where it's going to. You understand? I don't know where he's going to yet. I don't know if he's going to that beer bar. I don't know where he's going to yet. I don't know where it is. I just know that for a fact that every time he goes out by this time, he gets somewhere. I don't know where it is. So I want to know where it is. So price breaking out of here. I don't trade this because I don't know where price is going to. I don't know how high price can go. I don't know if this price is going to come this high or go this high or even keep going higher. I don't know where it's going. So I have to watch it to wait and see where it wants to go. That is what I call the indication. Price is indicating to you of where it wants to go. You don't trade that. You just watch and see where it is going. Then the correction is in terms of price always corrects itself. Price never goes in a straight line like people think. That's why when maybe you are doing crypto trading or dollar and everything is rising, instead of you to wait for price to pull back, because price does not go like this. No, it doesn't go like in this straight line. No, it goes in that thing I've told you guys, in higher highs and higher low. If it's traded upside, it's trending higher high and higher low, higher high and higher low, higher high and higher low. It never goes in one single line straight. That's why when coins are pumping like this, maybe some not coin, I won't say coin, but when dollar is rising like this and you see that it's already rising and going higher and it's already going, instead of you to wait for it to give a pullback before you enter, you go and enter due to you are afraid that you don't want to miss out. Right? So what I'm saying to you now is that you don't trade this first. Hold on. So you don't trade this first indication here because you don't know how high price is going. So you're simply waiting for price to go how high it wants to go for you to then know where it is going to. Just like your brother or your cousin or whoever it is that is a drunkard, right? So after it has gone there, you have seen there, and then you wait for him to come back. Because of course he will always come back home now. He no go sleep outside. So he now comes back. Right? Now you have seen that he's back home. Now you have made two things clear to yourself. You have identified two things. That every time by 5 p.m., if he's going out, he's going at this bar. Right? So you now wait for him to come back. Then tomorrow, again, reach. 5 reach again, and you see him opening this door by 5 again. You know for a fact that Omo, now here in the go. So you now walk with him to that bar because you know for a fact that that is now where he goes every time by 5 p.m. And that's the same thing with the chart. When you see price break above this level, you see that price struggle to break here. Something stopped it here, stopped it here, stopped it here, and then eventually it's broke out of here. What this means is that it's telling you that inside here it is ranging because sellers were pushing price down. They were not allowing it to go above here. But this move here that it made here gave you the indication that price wants to keep pushing up. So now seeing this indication, which you do not trade, wait for the correction. Wait for the what? The correction for price, because price always corrects itself. It does not move in a straight line. It will always correct itself before continuing its moves wherever it's going to. So now you know where it's going to. It has corrected itself back, which is the correction. You don't trade this one as well because you don't know how low this correction can go. Right? So after the price is now done correcting itself, when it's back above here again, this is what I call the continuation. Price wants to continue from what it did here. It wants to do it again. And this is where I trade. Because now I have identified that price is going at this place. I know that price, whenever it's above here, whenever it opens this door, it is going here. So now I've waited for it to come back. And now it's about to go there again. I will now come and follow it and be going there. So that's my system where I see price make an indication, which I just explained for you guys. Price showing you it wants to go this high. Indication. Correction. Price correcting itself. And then back above here is what I call the continuation, because price is now about to continue its move to that upside again. Just like your brother or your cousin or your stranger that is a drunkard who you don't know where he's going to every time by this time. And then one day you watch him go there, see where he's going to, wait for him to come back, and then the next day when he's going there again, you follow him there. So in this sense, you know more call trading than gambling, because you identified something that every time you go there by this time, probability that he's going there is high. Maybe if he goes out 10 times, out of 10 times, 8 times he's going to that place. So next time when you want to follow him, you know that even if you follow him now and he's not going there, if you follow him 10 times, he will get there 8 times. So if I enter this trade here 10 times, price will get here 8 times and I'll win the trade. Right? So this is how I like to view the market in terms of this is how I like to view the market and enter a trade. This is my system basically. So like my point in all these things is that you also have to understand that another thing is that price moves, like I told you guys yesterday. I told you price moves in zones. When price breaks above, like I said to you guys, it was like your floor and your roof. Now when you break above your roof, this your roof will turn to your floor. Because if you break above your roof now, you are now in another floor, in someone else's floor. So you are now in your roof now turns to your floor. And this is the same thing here. This was the roof. Price now broke above this roof. And then this became a floor. Let me work it out. This is a 3-story building. Let me make it 4-story building. Because the world is now advancing. We are seeing more story buildings. So 4-story building, right? This is the roof. This is the roof. Why it is a roof is because sellers are here. They are pushing price down. And like you have to also understand another thing. Let me explain this in theory so it makes more valid sense. That case where I said you see two teams are fighting, team A and team B are fighting in a market, and you don't know who's going to win. What you do is that you wait to see who's going to win, who's like starting to gain more momentum. Let's say you see team A has 10 strong men that has muscle and 5 slim men, and then team B has the same thing, 5 strong men and 5 slim men. You don't know who is going to win. So what you do is you wait. Right? You wait and watch to see what happens. And this, you seeing that price is rejecting this area, means that these sellers have the same power as the buyers pushing it up. So you don't know where price is trying to go to. So you wait for price to make a decision where it wants to go. So in that same fight now, let's say when they start fighting, team A now come and kill 4 of those team B strong men, leaving them with 5 slim men and 1 strong person, and then team A has all their strong men and weak person. This thing now shows you signs that team A is winning this fight because they have more strong men now, and they have more men, and they have already killed 4 of the team B. And that thing in theory part, that in practical part is just price giving you indication, breaking above this place, showing you that okay, now we have beat the sellers here. And once they beat the sellers here, what they are going for is the next place that they will see sellers, which is the next resistance zone, which is the next roof. Roof is basically where sellers are packed at, where sellers are in the market waiting to push price down. So when they beat this place where sellers are, next place they are going to is where they will see the next sellers, so that they fight them again. Right? So this move here is the indication. Now you don't know where the next sellers are. That's why you wait. When price gets to where the next sellers are, maybe they end up pushing price down. Maybe they don't. Maybe price beats them immediately and start going for this one. You don't know how it's going to go. You don't know how high it can go. You don't know where it's going. So you wait for it to make this indication, showing you where it wants to go. And then after it's done that thing, price done that thing, you wait for correction. Because that thing where they fight all these fights, at some point they run out of men. They'll need more men. They need to go and bring more men. So you wait for correction, for price to correct itself. After the correction, back above here, after they grab more men, once they're outside of the door again, you know that they are going to where they stopped their last fight, which is this place. So they are dragging those men to go to this place. So once they are above here again, you know that they are again where they are already beat all the sellers there. So you enter the trade, trying to carry it to the next fight location. Does this thing make sense?
Yeah,
It
sure.
does make sense.
All right, good. So that's how I approach the markets, basically. So it's just a roof. Just know this for a fact. When it breaks this roof, it's targeting the next roof. And roof is just basically where sellers are. If it's buying, that means the roof is where sellers are. If it breaks that one, it's going to be for the next roof where sellers are. Right? So it's just always going for the next roof, breaking this zone and going for the next zone. Right? And that roof is what they also call in Forex terms, it's called resistance. That's what I told you yesterday, telling you guys they call it support and resistance. Let me type it out. Resistance and support. So Victoria, I'll get to you. So this resistance and support is basically just roof and floor. Roof and floor. When price breaks this one, it turns this one to support. It's going for the next roof. Right? So just take support, leave the English. Take support as floor. Call it, let me mark it out so that I'll be making sense. So that I'll not be talking nonsense. Let me put this here. Then put this one. Then just start. So I'm telling you that I know that the name resistance and support sounds more forexified. It sounds more like you are into Forex. I know. But I'm telling you now that as a beginner that is trying to still learn this thing, the best way to say it to yourself, for it to make sense, for you to understand it, is by calling that resistance roof and calling that support floor. It makes more sense to you. It's easier for you to understand it that way. So resistance is roof, support is floor. When you break above your roof, that your roof turns to your floor and you're going for the next roof. That is you making higher high now. You have broken this your high. Now you're going for the next high that you want to break to make a new high. Right? So call resistance roof call support, floor. That way it makes more sense to you. Now, all this I've said here, let me show it in the chart. Let me go to where I'll see a very good example. Okay. So you see that, let me use this area. Now I'm cherry picking this, so I'm trying to pick the most perfect example, right? But I'll still get to talk to you guys how to approach things a lot, because everything you're saying here is a bit more confusing to you, but we get there. So right now, let's say this area here, see that price comes here and something makes it go down. It comes back here again, something pushes it down again. This thing tells you that at this particular area, particular zone here, sellers are in the market. And at this point, buyers could not beat them. They pushed them back down. They came back here. Buyers could not beat them. They pushed them back down. And then eventually, buyers beat them. Price broke here, giving you an indication, telling you that, hey, above this level here, I can go this high. Right? Now, when price broke out of here, the reason why you did not enter this trade here is that you don't know how high price is trying to go to. You don't know where it's going to. So you just leave it and watch it to see where it wants to go to. Right? Price then makes this high here, showing you that at least you know that, okay, now you know that the next sellers are here in this place where price has rejected now. Now you know that the next sellers are now here because the price could not break above here. Then it's corrected itself. Notice that how after it corrected itself, it did not take out any of these lows here. Right? So you see in the trend up, and you know for the fact that every time price comes above here, it is going this high. So now seeing price back under this level, what you are now waiting for is to see it again come above here. And when it's above here, what are you going to do? You're going to enter the trade because you know for a fact that from what happened in the past, above here, it has come this high. So now that it's corrected itself back above here, it's targeting this high again. Does this make sense?
Yes, it makes sense, sir.
And also, like I said, this is a cherry picked trade, right? I'm sure if you go to these lower levels here, you might see this now explained here, showing up here, but didn't play out. And you'll be asking yourself, but why did it not play out here? Why did it play out here? That is because that price, the market was in a trend. That is why you need to understand what is happening in the fight before you talk about how to enter a fight. Remember, this thing I told you guys here of correction, continuation, and indication is just a way of entering the fight. But before you enter the fight, you have to know what is happening in the fight. So when we find out what's happening in the fight, we realize that gold was in an uptrend. Gold was trending upside in the higher time frame. So we now come to the low time frame, trying to enter the fight. We're waiting for price to give us moves that is in that upside. Because it is in an uptrend. We want to be taking moves that is going to that same trend, that same direction of the trend. You don't want when price is trending downside, you are looking for trades that is going upside. You don't want when you come to a fight that plan B is winning and you are looking to go and join plan A when plan B is winning the fight. And remember, I told you how you know who's winning the fight is by trend. If he's trending up or he's trending
Oh, baby. You feel the grandma.
right? If he's trending up or he's trending down, that is how you know who is winning the fight. So if he's trending up and you see that buyers are winning the fight, what I advise you do is that you go and keep looking for trades that is going to that same direction that trend is going to. Right? And I told you guys something about yesterday that when you zoom in, it becomes unclear. But when you zoom out, it becomes clear. Shall you see how we were in the, let's say the 1 hour time frame or 2 hour time frame or whatever time frame? Let me use the 1 hour time frame. We are here and everything was looking, there was so much information here. There's so much happening here. Yes, it's trending up. Again, it's trending down. Now it's trending up. Now it's trending down. When you zoom out to the daily time frame, what you realize here is that it is making a simple move, which you already know. It is just making that higher high and higher low. If you see here, respecting this low, right? Respecting this low, right? Respecting this low. Just making higher high and higher lows. It didn't respect this high, it broke this high, broke this one, broke this one, making higher high and higher low in the big time frame. In the 1 day time frame, it is making these things. But when you go to the smaller time frame, the 1 hour, it looks rubbish. It looks like a lot is going on there. It looks like the information that is going on there is too much. That's why I say when you want to analyze, you need to take a step back, zoom out, and see what is going on overall. That is for the beginners. That's someone that is trying to learn how to trade. You need to zoom out and see what is going on overall. When you see what's going on overall, then you now go. Even if you are someone that is trading the 5 minutes time frame or 30 minute time frame, first of all, find out what is going on overall. When you see what's going on overall, then you now want to go to that lower time frame and then find trades that is in the same direction as the overall movement. Because as long as you are with the trend, as long as you are, they say in trading, trend is your friend. As long as you are with the trend, most times you win the fight because you are in the direction of the winners. So even if you are not so strong, if you go and join team B that's already winning team A, chances are that you will win the fight. Chances of you winning the fight becomes a lot more higher. I'm not saying you must win that fight. I'm telling you that your chance of winning the fight becomes higher. So when you start from the higher time frame, you see the overall trend, ask questions of what is happening in the market. When you want to trade, first thing you do is to ask questions of what is happening in the market by going to the higher time frame and seeing what is going on here, understanding what is happening in the market, and then going lower to lower time frames to now understand what is going on there. Now you see that daily is bullish. When you go to the lower time frame, the 1 hour, and you see that it's still bearish, all you do is just you wait. And then while you are waiting, some people might not be asking, so why I'm waiting? How do I now know how to enter or how to catch a trade that is now going to the upside? And I'm telling you now that how you catch that trade is by ICC. Waiting for price to show you an indication of where it wants to go. Maybe it's trending downside and then tries to break above 2 zones, rejects itself, finally gives a move above that zone, giving you that indication that price now has intention to now start moving up. After that indication, wait for correction. After correction, back above here, you know that from what happened here, above here, price can go this high. And also, in the bigger time frame, price is trending upside. So overall, in the bigger picture, they have more buyers in the market than sellers because it's trending upside. So you entering a buyer here, not just that you have what happened here on your side, you also have trend on your side. And that will like play a big role on most of your wins because you are trading with the trend. So someone asked a question, someone raised their hand up. I think it's Victoria. What's your question, please?
Okay, thank you. Okay, my question was while you were explaining, I just thought that how about periods where there is a downward movement in the charts and it goes really, really down and then it doesn't go up as high as high as it was or as high as it went. Is it that it will always go up? I don't know times where because there was a time where traders were complaining that oh the market is bad, market is bad. So I don't know times where the charts go down, like you go down and not go up. I'm sorry, my not using Forex terms,
I understand what you're trying to say.
but that's not
Let to let you land.
yeah. Yeah. I don't know if you understand what I'm trying to say.
Okay, so explain yourself again. Use simple terms that you can use. It doesn't matter if you're using Forex terms.
Okay. So now this chart that you're showing us now,
Yeah,
when it goes down, like it goes really down
yeah,
and it goes below the existing floor.
yeah,
Are there are there scenes or scenarios where it will not go up, even if it's going up, it will not even go up to the roof that it was before it came down, before it fell. And then it will just be below that roof for a long time. Like it can be below that roof for 2 months. And
yeah.
then can something like that happen in a trade?
Of course, it can happen. When it happens,
So what makes it happen? Why does it happen like that? Or why would that happen?
what happened there is that there's a change of trend in that time frame. What you are saying is this. You are saying
Mm-hmm.
it's going up like this, doing this,
Yeah.
doing this,
Uh-huh.
right? And then let's say at this point, price makes this high, comes here and
Uh-huh.
this, does this,
And
start.
goes very low. Yes.
That means that there's a change of trend. Of course, that uptrend is not going to go on forever.
Okay.
So this was the uptrend. When you see price starting to take out this trend, like I told you, start to take out this trend and respect the highs. That means that it has turned from an uptrend to a downtrend. It's not in a downtrend,
Okay.
right?
So
So
the sellers are
for
winning.
those for you that say for traders that are saying market is bad, yeah, in that time frame is the downtrend. But if you go to a bigger time frame, maybe the 1 day time frame, you might realize that on the 1 day time frame, like I told you guys, on the 1 day time, on the big time frame, it will be in an uptrend. But when you go to smaller time frame, it will be in a downtrend. So my advice is now when you're taking a trade, try to look for trades. Try to look for trades that are in the same direction as the trend which you found on that higher time frame.
Okay.
And also, this question you ask now is a very good question, right? There's so many scenarios that will have explanation, but I'm just telling you the basic normal explanation for you that is starting out. You don't want to get into that deep level yet without knowing the basic level. When you get to
All
understand the basic level, then you now get to understand it a lot more deeply.
all
So
right.
the
All
basic
right.
level is that it is going up, and when it comes, starts changing trend. This move here shows you a change of trend. Now, how do you know that price is starting to change trend? Because that's basically what some people might asking themselves out. How do they know when price is trying to change trend? How you know is by watch this price. When price comes and takes out this level, right? Once price takes out this level now, it doesn't mean that we are now in a downtrend though. No, this might just be price taking out buyers that have their stop loss here. I'll still explain that one. That one is called liquidity. I'll still explain that one. But this is not enough reason to say that we are now in a downtrend. What you need is you need price to come and form a lower high, because what you know, price just gave you a lower low. Price just took out this low. here and gave you a new low, which is a lower low. It has not given you a lower high. So you wait for it to give you that lower high, respecting this level here, right? When it gives you that lower high, then it gives you another lower low. This now gives you that confirmation that, okay, price is now changing trend.
Oh, okay.
So in terms of ICC now, this break here becomes your indication. Price has taken out this level, showing you that, hey, under this level, I can go this low. Now, all you wait for is the price to correct itself. And then back under this level, we already know for a fact that it is heading to this point. Does it make sense?
Yeah, it does.
Yes, sir. It does.
All right.
Yes, sir.
All right. So basically, what I've explained to you, I've explained trend, how you take a trade. Yesterday, I told you guys how to start trading by your own. You want to trade on your own. You want to sit down for 2 years, take those losses, but you want to learn it, or you don't want anybody to teach you. No problem. I showed you how to start it. First of all, let me break it all down again. If you want to write it down, write it. Please put yourself.
Raman Jan. Na nke nwere gochara last and last.
Put yourself. So when you come, good. So, like I said, when you want to start trading on your own for the first time, you don't want to learn on your own, you want to go. This is how to go. First question you ask yourself is, first of all, you go to that basics and learn those basics. You need to know all these basics, what is support, what is resistance, all these things. I've already explained to you guys everything in theory, but when you now start reading up on them, it makes a lot more sense, right? So let's say you have done those basics now, you want to start trading, you want to come to the chart to trade, to see how you can be able to advance, right? First thing you do is finding out your schedule. When are you free to trade? If you are free in the afternoon, if you are free from 12 p.m. tonight, that means that you can trade the New York session. So after you find out when you are free, you now find out what session moves when you are free. When you find out that session that moves when you are free, you now ask yourself, what pairs move during that session? So if you are free in the afternoon, that means that you can trade that New York session, which is from 2 p.m. to around 6 p.m. You can trade that. Then ask yourself, which pairs are available? Which pairs move well during that time? You find those pairs. You probably find like 5 of them. And then what you're not doing is go and back test it. Just go back 5 years time or 3 years time in the charts. Go back and just see move and ask yourself, what should I have done? Do something. Take a buy or take a sell. Write down why you took that sell. Whatever the reason may be. Even if it's that the candle head looks a little bit like my dog's ear. I don't know what the case may be. Everybody has so many different wide reasons. Widest reasons for that matter. Some might use widest of reasons to enter a trade, right? So whatever your own reasons are, write it down. But I'll advise you to use more Forex reasons, please. But whatever the reasons may be, write it down. When you do this over, like when you take all the trades you take from that 5 years back to now, you check what your wins are. How many did you win? How many did you lose? Then you go and check your losses, the ones you lost. What happened that I took the losses? You see why you took those trades. And then you go to your wins and ask yourself, what are in these wins that are not in these losses? What did I do here that I didn't do here? You will see reasons. I'm telling you for a fact. You will see those reasons. You will see it there. You will see that in your own handwriting. You will see it there. Bring those reasons out and start doing more of what works and less of what doesn't work. Now, what I'm showing you guys today now is just me showing you guys a way that I enter my trade. So you can say, if you're backtesting that, if you're now trying to backtest that's your own pair that you're choosing for yourself, you can use my way of entering to try and use and enter your own to see how good you will do if you are trading this way I'm trading. Or you can also do it your way, whatever you want to do. But when you do these things, to take time, when you do these things, you kind of find a pattern that will work for you. That because it's not a pattern that was taught to you by someone. It's a pattern that works for you. You have found a pair that works for you. You found a time that works for you. Found a session that works for you. Found a pair. Find the system that works for you. Because you sat down to create it for yourself. I'm just telling you how to create it for yourself. Right? And also, I'm telling you that there are some things that you can never ever learn anyway. That's why I said that this class, you people needed to be in this class by all means, because as you can see me here, I don't have any book that I'm reading anything out from. I don't have any book that I'm here trying to tell you things from. No, I'm simply just giving you guys the information that I have from my brain. There are some things that I will say here that you will not see in a book, because some lessons you will learn in this trading can't be explained to you until you experience it. Like life, there are some things in life that you have to experience to learn from. So there are some lessons in this trading that you have to experience to learn from. What I'm here to do is to tell you some of those lessons that you have not yet experienced, so that maybe when you see it tomorrow, you recognize it faster than you would have when you didn't even know about it at all. Right? So while you are doing that back testing, you are going to learn some lessons too that cannot be explained. And the funny thing is that these lessons will be written down in your very own handwriting, not in my handwriting, in your very own handwriting. You write it down unconsciously, but you now realize it when you now start to go back to the record and see the things you have written down. You will realize some things. I'm telling you, there's no joke in it. And this is probably the most important part of training that you have to do, because it requires you sitting down to check on things. Right? So I've given you guys way to start trading even tomorrow. The thing is that before you go live on your account, it will take some more time, because you have to generate what? That's reasons why you enter the trade. You have to generate them one by one, generate it all, and then go back to it to see things that you can correct them, correct them, and see how good you're getting before you talk about trading on a live account. So it takes some time. But I believe that I have given you guys step-by-step guide on how to start and how to continue to keep pushing through. I did not tell you this is how you must do it. No, I've showed you the way you can do it to get to a destination that will benefit you, that will also work for you. Right? So I would love for you guys to give me some questions. I'm a human being. Some things I might forget something that I want to say. So please give me some questions. I would like to see some questions come in. But I don't have any question, maybe from yesterday's class or maybe from today's class. Just give me, or maybe from what you have seen before that you've been wondering. Ask me your question.
Okay, I have a question.
All right.
So, as a novice, a complete novice in trading, how do I start trading? What applications do I need to trade? And can I trade on my phone?
Okay, so the reason why you can trade you can trade from anywhere. Even if you have Nokia 310, as long as that Nokia has access to internet, you can trade from that phone. Does not matter. The only reason why I advise trading from your system is because if you look at this system now, I get to see a lot of informations. If you zoom out, you see a lot of things. Meanwhile, when you use your phone, you probably be seeing maybe only this portion. So bigger screen, better. I didn't say you should go and bring your television to use and trade. No, TV is too big. If you want to use it, that one is cool, but it's too big. A laptop does the job better, or maybe a desktop or monitor does the job. But if you don't have that, you can use your phone. If you have a tab, that's good. Use your tab. It's big and it can give you more information. But I'm just saying that the bigger the screen, the more information you'll be seeing. That's just why it's good to trade with the system, because it gives you a lot more information, right? So you can use your phone. Yeah, that's the answer to the question. But I advise you use your system. In terms of apps to use, I shared a video in the group today. The name of the app is TradingView, and that app is this one that you're seeing now. TradingView is just a place that I come to analyze the market personally, right? You may want to use another chat system. Me, I prefer this one because it has every tool that I need. It has more tools that I need self. So I prefer this one, obviously. So that's why I'm using this one called TradingView. I dropped the name of that app on the video I shared in the group. If you go to Google, you see there. It's called TradingView. If you haven't seen the video, let me show you the name here again. See it here. TradingView. That's the app that you can use to make this analysis. And this app can also give you access to like view information from way back. By zooming out, you'll be seeing information from way back. As you can see, I'm seeing information from way back. If the more I'm zooming out, the more I'm seeing more info. Let's say that I have a slow network. But the more I'm zooming out, the more I'm seeing more info. So you can use TradingView, that's the app. And yes, you can use your phone if that's all you have. And how do you start? How you start is by just going to TradingView and starting and doing that night I've told you. But first thing you do, I think the first hold
That
on.
TradingView.
The first thing that you will do is by understanding the minimal basics. So for you, I think your name is Victoria. For you, first thing you will do is that after you downloaded the app TradingView and you have your phone, just go to this app called Baby Peeps.
Sir Morgan.
This place will tell you how you can be able to. This place will teach you the basics, every basic. How they calculate those candlesticks, what they mean. Like it will just give you basic meanings of those so that you know what you are dealing with. So first
Sir
place,
Morgan.
yeah, I'm coming. I'm coming. So first place is here. You come here and you learn the basics here, and then after you learn the basics here, you now go to the chart and experience the real life chart. Just do this place fast and then get to the chart because chart is where it has the lesson you want to learn. So does that answer your question?
Yes, it does. Thank you very much. It does.
All right, Amma, please, what's your question?
My question is, I'm the one that dropped at the platform that this baby pills not want to open. I tried using my Chrome, but along the line it stopped. So I was the one that dropped and asked you that what next? Because I was trying to download it in the afternoon. Although what I use is MT5. That's what I use currently.
MT5 is MetaTrader 5. Okay, for this one, for this place now, this is just when you get to this website, this is what you will see. This is what I'm seeing. So what you do is I advise to click on join, open an account with them. It's always better because why you open an account with them is that I'll tell you why in a minute. You'll see why. It's very important. So I'll advise you join. When you click on this join, I don't know, I think you are using your phone to asking you for information. I can't help you with that thing because I think it's a very simple thing that they're telling you to do, but you just are skipping that information. But if you can give it to someone else, someone else can do it.
No.
Not there with you. You say?
No, when I joined, because I followed the link that you dropped. So I joined, it was telling me I should log in after putting my password, creating my username, my country code and whatsoever. So I put in all those things. But along the line, I dropped it at the platform. Look at it now. After I've already added my email, and when I tapped login, it stopped again. It was click to verify, click to verify. It was still on it, but it was not moving anything. It was not moving at all.
Maybe try entering another device and see what happens. Even if you don't sign up, you can still use it. You can still just learn from without signing up. But for those that wants to sign up, just click on this join and then follow these rules here. But for those that don't sign up, just if you want to join, just follow here and just fill the information and then provide it and then sign in and then you are in. But for those that don't want to sign up and just learn from here, how you learn is that when you come to this page, it will be this thing moves by itself. Sometimes you come and see news to crypto, and then you come and see new to Forex. You need to go to the one you are looking for, which is Forex. If it's not, if you come and it's in crypto, please tap on the next button. You will see Forex. Then you tap start learning.
Okay.
When you click on start learning, what will open for you is opening. Is this? What is showing here is this is my So if you come here, and when you are here, these are like levels of they name their school. Their name is preschool. They name the preschool and all those kindergarten. They name all these things. But what I would say is that just when you just come and you just click on get started, it starts you from the first place. Here they say what is Forex. As I see, just the courses on this preschool. What is Forex? How do you trade Forex? What can you trade on Forex? Who trades Forex? Why Forex? You get? Then the next one, it tells you Forex broker. There's something they call Forex broker. So to explain it for you well. They have analysis types of charts. So this is where you learn basics. This is that support and resistance levels. This is a type of candlestick, which is that one we are using, Japanese candlestick, right? This is Fibonacci, this is moving, and this it just teaches you some basics that you are going to probably use, not probably, that you must use while trading. And to show you guys that I read this during my time in 2019, let me sign into my account so that somebody will not think that I'm giving them something that I have not used, that I learned from air. Let me enter my account. No. I don't know if I remember my password, but let me try. Okay, so it's in my account now. As you can see, let me click here. My internet is slow, so please hold on. All right, so as you can see, this is my name, Morgan. I was answering Morgan 08. So let me go back. This is my account, right? And if you go scroll down now, you see that I have completed 217 lessons out of 363. And I did this thing in 2019. Oh, if you look, all this one don't tick. I don't go through all these ones. I've gone through, I already know what this was. So I've gone through this. I've gone through all this, what I needed to get information on. Some of these things are not complete because I did not sign in when I was going through them. So that's why you're doing like I'm telling you, I finished all this in 2019. I probably stopped around here. I did some more, but like my point to you now is that I went through this as well on my beginning stages, and it taught me some good lessons. And this place is a place that taught me how to explain Forex using someone that traveled abroad. Another explanation was the killer. When I heard it, I was like, wow, is that what Forex is? And I believe that anyone that hears this will be like, wow, is that what Forex is? Because we are all human beings, so we react to things same way. So like I learned from here as well. So I advise you to come here and learn from here as well, right? This is my account, and obviously, as you can see, I went from me. I used this place in when I opened it. I don't know if there's a way for me to show when I opened it and what my account is or which year I opened it, but like I used this place just like you guys. There's no way for me to see when I opened it. So that one is it. So this is where you come to and learn the basics. And then when you learn the basics here, even if you don't sign in or join, you can still learn it as I've shown you. So just go through it. And the only thing that if you don't sign in, the only thing that I say you should sign in for is that if you don't sign in, then this thing will not be able to record your progress. Because it came here recorded, I have completed 41 lessons. And after each lesson, I used to write quiz. So if you don't sign in, even if you do all those quiz, it will not record for you where you stopped. It's just that I have to now know where was I where did I stop and where do I continue. You have to be the one to remember that. But if you sign in, it will save it for you and tell you where you stopped. That's why I say sign in. That makes sense.
Yes.
So is there any other question that someone wants to ask? Please ask questions. I would like to hear questions. Okay, well, so it seems like there's no other question. So I've taught you guys how to start. I believe that anyone that was in the class yesterday and today knows where to start from. Bapew.com, learning basics. If you already know basics, then you'll know what next to do. If you don't know what next to do, please watch the class again. Then is there anything I would like to share? I don't think so. Our next class will probably be tomorrow, same time, 7 p.m. I don't know what we'll be talking about in the next class, but it'll just be a roundup. But our next class is going to be tomorrow. So I also teach how to trade from beginners level to advanced level. I teach that, but I'll talk about that one tomorrow. I'll talk about how my plan will work and everything. I'll talk about that one tomorrow. For now, I just focus these first 2 days on teaching you how to start by yourself on your own without going to anywhere to hear any wrong information, bro. Without going to anywhere to hear any wrong information that you don't need. Right? Because the issue is that when you go to the internet, there is so many information on the internet, so many, that YouTube is a great place to learn. Don't get me wrong, it's probably the best place to learn. But I don't think that it's a place for you to go and learn something that you don't have an idea of yet. Because when you go there, you will find so many information. Do you know that if you kill someone today now, if you go out there on the road and shoot someone, if you go to the internet, you see where they told you that they understand why you killed the person, that you are right. And if you also go there, they also tell you, also see where they'll tell you that you are wrong for killing that person. So basically, internet, YouTube, wherever, has both good and bad information. And when you go and take in all of them, you don't know which one is wrong or which one is right. You don't know the one you need and the one you don't need. Because most information there are people trying to force the way they trade on you. Trying to tell you to trade SMC, ICT, or whatever the case may be. And you don't even know if that way of trading is going to work for you. So that's why I said I've come here to teach you guys how to find what works for you by yourself. But it take time and probably cost you money because you're going to encounter when you go live on live account, you encounter some losses. You will see some experiences, some real experiences that is not written on books. Like I was always putting on, if you don't follow my Instagram account, I advise you do, because I do post videos. Let me go to my account. Because I do post videos about trading, giving tips on Instagram. I don't know if it's going to open, but okay. I do post videos. It's loading. Hold on. So I do post tips, giving tips how you can trade. As you can see, these are videos of me giving tips of how to trade. And this is also where I'm breaking down my trades, right? So what I'm trying to tell you now is that there are lessons that you will need. Example, the best lesson another lesson I dropped on my Telegram, I dropped on my IG was I was telling people that if you are someone that cannot manage your personal finance properly, it's going to be difficult for you to manage your trading accounts. Let's say you come to your personal life, you go and buy things you know you cannot afford to buy, things that you know you don't have the money for, you go and buy it. When you are someone that does not know how to manage yourself very well, you always struggle to manage yourself financially. most likely you're also going to struggle to manage your trading account. Because like I told you, trading is all about your personality. You trade according to who you are. If you know who you are, you know how you're going to trade. Now, knowing who you are and knowing that you are someone that does not know how to manage your personal account, you don't know how to manage your finances because you keep spending and buying things that you can't afford to buy. Most likely, what will happen is that in trades, you will keep taking trades and risking too much money. That's the tip I dropped on my IG as well. So there are lessons that I will really teach you guys that probably are not in my head now. Right? They're probably not in my head now, but I'm telling you that there are lessons that you need to learn. That's just how everything is. That's how every field is. There are lessons you need to learn along the way that will really benefit you a lot. Right? So that's why I say you either go down your way, you lose a lot of money, know that for a fact, and maybe eventually you get someone that will teach you how to trade as well. So just know that it's not going to be an easy journey, but as long as you persist through it, you're going to arrive. But I've given you steps to actually find ways that will work for you. Right? When you do this, what I've told you guys, you will not really need mentors to come and teach you how to trade again. You only need them on guidance on some questions, on some really deep questions that you need answering. That's what I believe. So I hope you guys get to hear me out and just take the classes seriously and do what I've said to do in the classes. It's a 3-day class. It's not enough for me to start teaching you guys everything. It's just a 3-day class. So, and I've started to put these 3 days of my own time to come and teach you guys what I know will benefit everyone. So I hope everyone just does that. And that is probably going to be the last thing I'll be saying in this class. Is there anything I want to say? I don't know. I don't know if there's anything else I want to say. Trying to remember if there's something that I want to say. Okay, just another thing that I would like you guys to know is that in trading, everything is connected. That's why I say if you can't handle your personal account, if you can't handle your personal finance, then you will struggle to handle your trading account as well. Everything is connected, right? If you do this correctly, you will come to this, you end up in this section. If you journal your trades, you end up asking yourself questions of what am I doing wrong in my wins? What am I doing right in my wins? If you answer that question, you see yourself in that section where you're asking yourself, how can I improve on this thing that is working? But if you miss this one, if you miss journaling your trades, there's no way you will know that you are ever wrong there's no way for you to now know what you are doing wrong now. So like everything is connected. When you do this, the next comes in play. When you do the next one, the next comes in play. There's no shortcut. There's no way to escape it. There's no way to say, let me jump and pass. If you jump and pass, no problem. Jump the pass. Eventually, your account will blow and you will come back. And that thing that you jumped to pass is what will blow your account. Because you don't just know, you just don't know it. It's not a place, it's a very brutal place. It's the hardest place to make easy money. Yes, you just enter a trade, put stop loss, put TP and go and sleep. Wake up tomorrow morning and you have hit TP, you made money. Yes, but there are things you need to understand to be able to get to that level. So the thing you do for yourself is just go through the difficult parts. Do not skip them. It's only going to ruin you. Don't skip it. Go through the difficult parts. Journal those trades. Write it down on the paper. If you use pen, do it. If you use your system to do it, do it. Me, I use this tool here, which I've showed you guys already. Right? I use this. All this thing you are seeing here is my trades. These are the results. Whether it's I closed by TP, I won, lost, lost. If you go in there, you will see where I wrote comments on why I lost the trade. Let me enter one. Let me say I enter one of this one that I lost. Let me use this one here. Let me open it. So I wrote reason. Looked a good trade at first, but it's just one of those positions that you can't do much about. These are reasons. They're just reasons. Like everything in this trade obeyed all my rules that I used to trade. So let me go to another one where I called myself an idiot for taking the trade. Let me see if I will see one. No comments here. Let me go to this one. Okay, this one I said solid trade, but I missed it. I missed it by a second. Also, because I was simply following my rules. Right? I'm trying to see where I also said negative things about myself. But I can't, I can't, I started using this journal this around 2 months ago when I've already been quite good. So there's no much bad comments. But I can show you guys. Okay, see this one. I said I lost the trade. And I said I knew I had to wait for a correction, but I was impatient and too eager for my first profit on the account. The trade idea was good, but timing and stop loss placement lets me down. Lesson: stop being afraid of losing and just focus on getting a quality setup. This is not my handwriting, I wrote how I was feeling when I took that trade and what happened in the trade. This is me. Even though I'm being this good, still writing down my journal. Let me go and find the one where I'll see where I really say bad things about myself. Me being this good, keeping that journal and just writing all of them down. So I really advise that you to also keep that journal because it will really show you a lot of things. I promise you, a lot of information that you had no idea was in existence. Right? Okay, now we are open this thing. Let me find one of my journal. Let me find the journal. Oh my God. I don't want this thing to come and take my time. One second, guys. One second, it's loading. Okay, let me see GBP, JPY, strategy development. Let me go here. So this is my journal then. This is a journal of over like probably 200 trades that I took. Let me check how many. Okay, 125. Right? These are 125 trades that I took. I put the date I took the trade, I put the pair, I put if it is long or short, I put session, I put the pictures of the trade, I put the results of the trade in different scenarios. I put how long the trade lasted. I put comments. If you look at here, you see where I say late Friday night trade closed L due to weekend. See where I say I should have waited for 1 hour test to close for the confirmation. Let me look for where I say a bad thing about myself as well. Textbook setup, but got greedy and refused to close when price got to the next support. Let me find another comment. At least just showing you me just being honest about a trade that I took. See where I said textbook setup, but in no trade range. Only patience can save me. Patience would have paid off here. Very poor decision, and it seems I never learn. This is me writing these things down with my own handwriting. Textbook setup, but I should have closed after 1 hour broke the resistance. Overconfidence. It's just me being honest with myself and just writing down the reasons why I lost a trade or why I entered a trade. This is my journal then. I used to use this journal then. I used to come back to the journal to see this journal alone really improved my system when I was trading this pair. So my point to you is that coming back to this journal is going to show you a lot of things. So you should really keep a journal. When you start trading, keep a journal. Use a journal. Write down the reason why you took a trade. Right? I said I will show you guys the one I use, which is this one here. Where is it? Did I close it? Okay, which is this one here. I will show you guys this I will show you guys this what was it called? Template. So you can now just edit in and just put in your own trade, whatever it is you entered. Put in your own trade and just save the pictures and just keep it there. If you look at my own, you see that I saved pictures, put comments why I enter a trade, save pictures. So this thing will really play a big part in your trading. This is my best advice. Journal, very important. So with that being said, I think that's all I can say for the class. And I think probably I believe you guys have learned something today. Did you guys learn anything today, or is it just me talking blocks? I said, did you guys learn anything today, or did I just waste my time today? Did you guys learn anything valuable today?
Learned something valuable, sir. Thank you very much.
All right, glad. So I think this will be the end of today's class, and the next class will be tomorrow, same time, 7 p.m. So I look forward to seeing you guys there. Have a great night. Thank you so much.
Thank you very much.
All right.